Hello, Amanda Kendall here with Elevating Profits. Today I want to talk to you about what is tax planning and what is not tax planning. So let's start really quick by defining the difference between tax planning and tax preparation, because I think those two terms are intermittently used too often and there's not a clear understanding of what the difference is. So tax preparation, let's start there. This is a very reactive service. Whether you're doing this yourself or you have somebody doing this, if you're just doing tax preparation, this is very reactive. What I mean by that is you're taking the numbers that were, you're plugging them in to see what is the tax bill. So the numbers that you did earn, the numbers that you did spend, determine what is your tax bill. So there's no planning, it's just what was and what is. It's very straightforward, cut and dry, but it's all very reactive. Once those numbers have been, you cannot change the number that is. Tax planning, on the other hand, is very proactive. It's actually diving into three very specific areas in your business and your lifestyle and figuring out how to use those three key areas to benefit you and legally reduce your tax bill while maximizing income. Because that is what tax planning is. It's maximizing income and legally reducing your tax bill so that you can fall into a lower tax bracket. That is one of the things you have to understand when you're talking tax planning is what is your tax bracket. You need to know what your tax bracket is. You need to know what tax bracket you're paying your income at, because if you don't have an idea of where you're at, it's impossible to map out where you want to go. So you need to start by understanding your current tax bracket. Once you understand that, you want to look at three key areas, as I mentioned. These three areas are pretty straightforward, but it's your lifestyle. How do you live? What do you enjoy doing? What are some non-negotiables that you're not willing to give up when it comes to tax planning? You have to understand these things and you have to communicate these things, because if vacations are important to you and you're not willing to cut any spending there in order to plan and save for future things and to shift some of this income, then you need to make that clear so that the person you're working with understands. So your lifestyle is one of the first things that you need to analyze and understand what's negotiable and what's non-negotiable for you in that sense. The second thing that you want to look at is what are your financial goals, current financial goals. What do you want to see happen this year? What do you want to see happen this quarter, this month, this week? Look at those. Then look at your 5-year goal, your 10-year goal, and then we need to talk about your long-term goals, your long-term future plans. What are your retirement goals? At what age do you want to retire? What does that look like? All of these things are a very, very broad overview of what tax planning entails. When you dive into the minutia of each of these three things is when the tax planning magic actually starts to happen. This is where we can do things like potentially bringing in $12,000 of income into your household that is not taxable to anyone in your household. Tax-free income, $12,000. Amazing. It's possible. It truly, truly is. You know, there's a way that maybe we could bring in another $2,400 of tax-free income to you. There's ways that we can shift income from one year to the next if we know we're going to have a lower tax bracket the following year, maybe we need to shift some income to that year. These are all legal strategies that can be used to reduce your tax bill, but it all starts with those three things: your lifestyle, your financial goals, and your future plans. When you know those three things and you know what's negotiable and what's non-negotiable for you in those areas, that is where tax planning starts, and that is where the rubber meets the road for you. So one thing I want to clarify is tax planning. I hear this all the time. And I used to have clients call me up and ask this, and it'd be December and they'd be like, all right, we need to do some tax planning. What do I need? How much money do I need to go spend this month to be able to bring my tax bill down? And I always like, what? Who told you that? That's not what tax planning is. Think about this. For every $1,000 you spend, at best, you may save a couple $100 in taxes. So going out and spending $10,000 or $20,000 on something in December to reduce your taxable income is not always a smart decision. There are other options, but you have to be proactive. Starting tax planning in November and December, you can recognize some savings. You absolutely can. We've done it with our clients. However, the earlier you start, the better off you are. So if you want to do some tax planning now, just know that the later you wait in the year to start, the less that savings is going to be realized in the first year. But then you can maximize it in the following years. I'm not telling you, I want to clarify, I'm not telling you wait until next year to start tax planning. Start now. Just know that you're going to see some reduced savings this year potentially because of the time frame we're working in. versus if we had an entire year to plan for you. So that is my video today on what is tax planning and what is not tax planning. I hope that answered some questions for you, but if you have any others, please drop it in the comments below and we'll make sure to get back to you. Again, my name is Amanda Kendall with Elevating Profits. I will drop a scheduling link down below if you'd like to talk about some tax planning strategies for you and your business. Otherwise, you can reach us by phone at 303-847-0836 to schedule an appointment that way as well. Thanks and have a great rest of your day.